Hello, this is Module 1. Module 1 is titled Introduction. Well, this module is indeed just the introduction for the course. So in Module 1, the first thing I would like to emphasize is all the course learning goals. As you can see on this slide, there is 5 learning goals for this class. The first learning goals want to emphasize the fact that financial market and financial institution are key elements to produce economic growth. To demonstrate this, we will basically rely on Chapter 1 and Chapter 2 in your textbook. The second module learning goal is to examine a very important variable that is called interest rate. To do so, we are going to use Chapter 3, Chapter 4, and Chapter 5. And in those chapters, we will start with defining interest rate, try to understand why interest rates change and how they change, and also look at the relationship between change in interest rate and change in the value of assets, securities. Then Module 3, it's a module that focuses on some of the most important markets. Specifically, we are going to look at stock market and we are going to look at bonds market. We will also look at the money market where we trade short-term debt securities. So for CLO3, we will basically rely on Chapter 12, Chapter 13, Chapter 20, and Chapter 22. CLO4 will focus on the U.S. Central Bank, the Federal Reserve. So what the central bank is and how the Federal Reserve conduct the monetary policy. So here in your textbook, we will look at Chapter 9 and Chapter 10. And then finally, the last course learning goal, CLO5, is to look at how a bank is managed. Not only how a bank is managed, but also what are the factors that impact a bank credit risk and interest rate risk. And here we will mainly focus on Chapter 17 and Chapter 23. Module 1 in your textbook includes 4 sections. The first section is titled Why Studying Financial Market. The second one, Why Studying Financial Institution. The third one, how we will study financial market and financial institution. And then your text provides an overview of markets and institution. So I will develop, of course, why we need to study market and institution, and that's what we're going to do mostly during the quarter. But at this stage, I want you to remember that financial markets are definitely crucial for the economy. Without financial market, countries do not grow, people's wealth does not change, a business cannot find capital. So we need financial market. Financial market, in fact, are designed to channel funds from savers to investors. And by doing so, they promote economic efficiency. So they promote not only economic efficiency, but personal wealth. They also promote increase growth in business activities. So remember, well-functioning markets are the key in producing high economic growth. So on this slide, I wanted to address how we are going to study market and institution. So you will see that I will use Blackboard extensively. I also have selected a textbook, and all the activities and everything that we are going to do together is organized in like the section listed here. Yeah. So there is some activities that I call watch and learn, some activities called read and learn, share and learn, and practice and learn. So in the watch and learn, I have uploaded a lecture video and sometimes some YouTube video. I also uploaded a PowerPoint, so you can download the PowerPoint and then take notes. Then when you're done watching the video, I suggest that you read the chapter assigned in your textbook to make sure that you have all the information that you need. Now, some students prefer to read and then watch. It's entirely up to you, whatever you're comfortable doing. So after reading and watching, or watching and reading, you will post some information which will be part of the section Share and Learn. And that information, you will post it on Blackboard. There is at least most of the time one post per week, sometimes more than one. And those posts will be shared, with everybody in the class. And then finally, the last section is practice and learn. We always learn when we have to try to do things, calculate, review things. So I have assigned some quizzes and some homework. And I also have recorded some videos again where I can demonstrate how we can solve the problems. So this is how we will learn. Now, generally speaking, what are we going to learn? Well, we're going to talk about markets, institution, and the central bank. To summarize what we will do when we talk about market, I borrowed this graph from a webpage that is called eFinance Management. I think they did a fabulous job here. So they summarize what financial markets are all about. And as you can see here in the bottom of this diagram, there is a lot of different types of market. And we can talk about markets when we have in mind the nature of the assets. So you will hear stock market, bonds market, commodity market, this type of term. Or sometimes we compare market when we talk about the nature of the claim, like equity market versus the debt market, or the maturity of the claim. Then we compare and we talk about money market, mainly the market for short-term debt securities, versus capital market for long-term capital. We also distinguish market by looking at the timing of the delivery. You probably have heard the term spot. So when you have an asset that must be delivered on the spot, it means immediately, but immediately means within 1 or 2 business days. Or we talk about future market, forward market. And then we can also distinguish market by looking at their organizational structure. And here you have some exchange trade market, over-the-counter market, and this is again a distinction that we will explore. Now we will also talk about various types of financial institutions: commercial bank, savings and loan, mutual savings bank, credit union, insurance company, mutual fund, pension fund, and finance company. So this is the intro for our class. Thank you.